We have with us Kunal Shah, Head of Commodity Research at Nirmal Bang, joining us. Let me start off, Kunal, by understanding from you how what you're making of the most recent comments coming out of the US in terms of the Jackson Hole Conference and all that the Federal Reserve Chair has said. What's the impact of that, in your opinion, on precious metals in particular, gold and silver?
Well, I'm not at all surprised by the Jackson Hole Summit's outcome, where the Fed chairman, for the first time in last 9 months, have given an indication that he is going to cut the interest rate. So this is a complete U-turn on the policy, and it seems that we are heading towards stagflation in US, where the higher inflation coupled with the slower growth is likely to be the new norm. And this is something, Mr. Donald Trump has been pushing him from last 4 months to go for the cut. But the main essence in this story is that by 2027, $14 trillion of debt in US is going to mature. And they have to either roll over or service those debt. I don't think so they are going to service those debts, but they are going to roll over those debts. So at 4.5%, they cannot roll over the debt. So interest rate have to drop drastically from here. And if they are dropping drastically, it is a good news for bullion. Apart from only one event, ceasefire between Russia and Ukraine, any positive news over there can lead to some correction. But I think beyond that, the road is quite clear for gold and silver to shoot up. Silver looks more promising as compared to gold, and gold, both bullions are likely to do well.
Got it. Silver looks more promising, but silver is also caught up, Kunal, to a certain extent. Trying to understand, given this rally, you continue to be bullish. What's the kind of risk reward here, and what's more preferred, gold versus silver? Because silver has also seen a bit of a rally. How much of a leg up does silver have, and where's that gold to silver ratio these days? Give us a perspective.
Okay, gold to silver ratio is hovering around 87.5, 88 right now. And going forward, we expect this ratio.
Which is still elevated, Kunal, for viewer perspective. It's typically been around 70 for viewer perspective. So this 86, 88 number is still 30% elevated. Sorry, Kunal, please go ahead.
Yeah, absolutely. So on the historical average of 70, we are still seeing it around 88. And going forward, we believe that this ratio can come down to 80, 78, those kind of levels in days to come. However, we are not recommending a ratio trade over here, but we are recommending to go outright long on silver. There's no need to go short on gold also, but there's outright need to go long on silver, where the risk-reward ratios are skewed to that extent that if you buy silver around 1,12,000, 1,11,000, I believe that it may not go below 1,05,000, and on the upside, by the end of the year, you may see 1,25,000 kind of levels. Next year, 1,40,000 kind of levels. So we are very optimistic about the outlook of silver, and I think the rally is about to aggravate going forward.
Okay, don't go short gold, go long silver. That's really the call coming in. You also had the Saudi Central Bank load up on silver, maybe a small quantity in relative terms. But thanks so much, Kunal, for coming in and giving us that perspective. That's, of course, Kunal Shah from Nirmal Bang.